larger market participants will take profit in their Bitcoin holdings and roll that profit into typically more speculative sorts of projects, things that are not as proven and typically have a little bit of risk assigned to them. And that's where you'll see the divergence where maybe Bitcoin isn't going down. It certainly could be, but it doesn't have to be. And the altcoins are actually performing a bit better. Hello, fellow traders and investors. Welcome to another weekend crypto update. My name is Jared, coming with a recording on February 28th, discussing the week that was, ending in February 27th. So just like last time, we'll have an overview of another technical analysis, this time the ETH USD or the Ethereum to US dollar chart. We'll be looking at the monthly, weekly, and daily and kind of speaking about some similarities that we did from last week, especially in regard to the Bitcoin correlation. We'll look at a tool that you can apply to analysis, and this is going to be the BTC.D or the market cap Bitcoin dominance chart. It's a way to get a sense of global market cap and some of the deviations between Bitcoin and other altcoins. We'll look at the overall crypto market and market cap to get a sense of how that dominance works, and then just looking at some news and events from the past week. So without further ado, let's get into it. Okay, so here we are on the Ethereum US dollar monthly chart. Once again, just using the Coinbase exchange to keep things similar. And as you can see, there are some key similarities that start to stand out here compared to what we did last week with Bitcoin. Now, obviously, Bitcoin being the leader in the crypto world, Ethereum does tend to follow suit in certain ways, as it is the second highest market cap project that we have currently. And while it doesn't necessarily have a halving cycle the same as Bitcoin's supply and demand model dictates, it does follow some of the cyclical nature of Bitcoin, as it does tend to follow, and a lot of market participants tend to utilize and leverage Ethereum as a way to gain market exposure. So first and foremost, we want to note this similarity because certainly as something like Bitcoin is going through its halving, the Ethereum project, assuming that it is still in existence and still utilized moving forward, we'll see similar sort of peaks and valleys. We'll have larger accumulation zones and just overall a lesser interest in the crypto assets during a quote-unquote crypto winter. And then, of course, these larger run-ups where the assets tend to appreciate quite rapidly. Additionally, similar to what we did with Bitcoin, we may want to start marking things like relative highs and lows. And these are going to be our most important highs and lows in regards to our monthly chart. And of course, this is just simply noting where these peaks and valleys are located, along with seeing the type of correspondence that these have had with price over the past couple of months. And in this case, this has been sort of our overall monthly trading ranges for the past year and a half. As we start to narrow this down, once again, just kind of locking in these levels relative to their corresponding peaks and valleys, and then maybe going ahead and marking these with the same color scheme as before. We'll kind of leave that for now, just kind of getting a sense of these ranges. Sometimes when you click, it doesn't always work, but these are the larger, just overall monthly ranges. And of course, Retrospect is quite simple in technical analysis, but you can see the correspondence with monthly highs and lows, especially back in May. One unique thing about Ethereum is it did have a similar sort of downside correction, but the speed of that correction actually was a bit quicker. It didn't quite occur until Bitcoin basically made its weekly lower high, and we'll take a look at that in just a moment. But additionally, from high to low, we saw that same 50% plus drawdown, and of course, the speed of the drawdown was much more dramatic, given that the altcoins tend to either be a little bit less liquid and also just a bit more over leveraged. People tend to trade them with higher leverage overall. And as you can see, as you get into the weekly, you can do that same type of analysis where you're marking maybe weekly highs, weekly inflection points. And these are going to be important areas of the chart, such that if you are to review, change this up to sort of that darker orange. If you are to review these inflections, these become areas that the chart either respects or sort of denies, rejection or acceptance of these support and resistance. And while Ethereum is maybe not as clean as some of the Bitcoin technicals, there are some zones of this chart, all of which correspond to that same analysis that we did in regards to a larger channel. And once again, this channel is easier seen once price has time spent in these ranges. Additionally, it's not necessarily absolutely perfect, but you can see that there is sort of a larger trading zone, trying to keep the high magnetized to the highs and lows. And then, of course, just a rising asset in regards to a bullish parallel channel. The asset is technically making swing highs and swing lows that are higher than previous swing highs and lows. And as you dig further and further down, you'll see things like some of the nuance with the most recent price activity, especially some of the nuance in regards to whether or not the entire crypto market space is about to experience anything like a bullish run, or whether or not we're still sort of in a corrective and possibly a reaccumulation phase. Similar to Bitcoin, after May, this took multiple months to sort of reestablish and regain momentum before seeing a relative low and then a sort of cycle to the upper bounds of the chart. So kind of the overall story here is that there are some very notable similarities between these two charts. And what's so great about doing technical analysis on correlated assets is you start to notice some of these nuances along with when they deviate. If something truly is correlated, then you may find that moments in time where the correlation breaks apart or something different is occurring, with the understanding that percentage differences need to be taken into account. But those differences can actually lead to a bit of an edge. If you are trading the space, or if you are actively trying to time certain maybe investments or just particular buys and sells, differences in that sort of analysis will lead you to take certain action or potentially not take action when the deviation is in your favor. So all in all, no matter how you mark up this chart, you'll see how this similarity takes effect. And as we maybe add something like the Bitcoin USD chart to this, and once again we'll do a new price scale, but we'll leave the Ethereum bar chart here, and maybe I'll go ahead and delete some of our levels just to kind of clear up some of the information. Maybe the overall channel can actually go here as well. So what you can see is on this overlay, there are those same run-up phases, albeit they are somewhat, I would say, deviated off to the left. And what I'm simply saying here is that Bitcoin tends to have the move first. Ethereum tends to follow Bitcoin, especially in a bullish environment, because the market cap appreciation that's going into Bitcoin is one of the drivers of the typically the future move in Ethereum. A simpler way to say this is that usually larger market participants will see relative gains in their Bitcoin holding. Those larger market participants will actually sell some of their holding, which leads to the supply-demand imbalance, can lead to Bitcoin basically correcting or doing some sort of downtrend. And then with Ethereum, some of those profits are actually rolled into this particular token. Essentially, the move occurring in Ethereum occurs later after some profit taking is taking place in Bitcoin. And this has pretty much been the case since the inception of these projects, albeit they are quite different in what they are trying to accomplish. The marketplace for it tends to still have that human, and obviously the larger market participation is what drives those asset prices up and down. And certainly seeing this pattern gives you a bit of an edge if you are trading in this space. Knowing that Bitcoin is maybe diverging in momentum will lead you to maybe look at altcoins for trading opportunities, because if there is profit taking, the divergence coming from the profit taking event, then an asset like Ethereum might perform. And this was exactly what occurred before the May correction, or I'll just say the March to May correction. Bitcoin was seeing sort of those swing highs and lows with basically a lack of follow through, just not as parabolic or not as easy to interpret as before. And Ethereum, while going through some similar cycles, did see a final sort of run up. And this is a very notable move here because we're talking about something like 100% appreciation. And this is while Bitcoin is making its first weekly lower high, or basically breaking trend for the first time since that divergence formed. So having some of this information in hand, and then also noting that for the rest of this year, or this past year, these two assets have pretty much been in step. I mean, there are some minor differences, but you can see that the price action is essentially equivalent. And one more notable thing here is that while Bitcoin was starting to change its trend, certainly forming the downtrend that we've experienced over the past couple months, Ethereum was holding quite well, essentially, likely seeing some similar profit taking, but not having the same decline until much later. And that's, of course, when these two assets really became almost one for one. Obviously, though, this is a marketplace that can cut just as hard in both directions. Ethereum with probably about a 55% decline, and whereas Bitcoin, if we mark from here to here, probably only seeing about a 45% decline from high to low. This is the 69,000 to about 32,800. So, similar run-ups, higher percentages here. We're talking about something that tends to move just from a relative sense a bit more aggressively, but very correlated to the main project, basically, which is Bitcoin, or the market leader in this case. So obviously not speaking too much about the actual project on this video, but if you are interested, I do highly recommend looking at Ethereum.org, learning about the ETH token, which is the underlying asset that we all just analyze and tend to trade and invest in, learning what some of the nuances about this project are, maybe even dovetailing into how a lot of other projects are built off of this platform. That's kind of the whole draw of this project, is it is a foundational project. It does have the ability to hook in different decentralized applications or DApps. And then, of course, the new EIP-1559. Certainly look that up if you're interested. But that is a foundational change that is what the current project is working through as we're running to the next release, which is Ethereum 2.0. So lots of interesting stuff here. Definitely recommend coming to this page and sort of learning about the project if you're interested. So shifting into a new topic, this is the Bitcoin market cap dominance, or just the BTC.D chart. And wanted to bring this up as a way to offer a different tool for technical analysis, but in a more aggregated sense. So what we're looking at here is essentially a visualization or a charted overview of what we've looked at before, which is the global currency market cap, either with everything involved, and this is where you're going to see things like about 1.8 to 1.7 trillion inside of crypto as far as its market cap. But if you exclude Bitcoin, and as we know, Bitcoin represents about 700 trillion at any one point in time, at least currently, the total cryptocurrency market cap by itself is actually maybe much smaller, or just takes a significant portion from Bitcoin. So whenever you visualize this, and we can kind of draw this down maybe to a weekly to see some of the nuance, you are going to see a percentage-based chart. And all this is showing is that the total market cap inside of all cryptocurrency assets, a certain percentage of it will pretty much always be in Bitcoin. And when you start to chart these percentages and look at some simple technical analysis activity, you'll start to notice moments in the actual asset charting price that correlate quite well to technical breakouts, breakdowns, essentially level breaks, testing, and all the general TA skills that you would normally apply. So for example, in our most recent, I would say location of the chart, you'll notice that the Bitcoin dominance, just kind of zoomed out a bit, is seeing a little bit of a rise in Bitcoin dominance, at least from a relative low place back in mid-January. And all this is saying is that the total market cap of Bitcoin is either rising faster than the rest of the, I'll just call it altcoin market cap, or the total market cap of altcoins is going down slightly faster. And of course, as a ratio, or if you think of this as basically just Bitcoin market cap over altcoin market cap as a percentage, that ratio can be accelerated or just be somewhat stable depending on which one is actually taking place. So you can see moments in time where the asset market caps diverge. You can also see some interesting signals for the marketplace. One exercise maybe to take is to actually look at this relative high on Bitcoin's dominance. And what you'll note here is that Bitcoin is not necessarily declining at this time. It's not going down relative to its price. But during this period, altcoins actually had a bit of outperformance. They stayed elevated higher or longer. And some of them actually were still in very appropriate uptrends. They were actually reaching for new all-time highs. And this is all during a time when Bitcoin was seeing a slight decline in its percentage market cap. Once again, this calls back to the idea that larger market participants will take profit in their Bitcoin holdings and roll that profit into typically more speculative sorts of projects, things that are not as proven and typically have a little bit of risk assigned to them. And that's where you'll see the divergence where maybe Bitcoin isn't going down. It certainly could be, but it doesn't have to be. And the altcoins are actually performing a bit better. So feel free to go through this exercise and use this as a tool, especially if you're trading in this environment. These short-term signals can offer really good ways to signal profit-taking events, along with maybe switching allocations just to get better exposure to the right projects. So calling back to the global cryptocurrency market cap, this past week certainly was tumultuous with a lot of the geopolitical issues that are currently ongoing, calling out things like the Russia and Ukraine invasion and all of the sort of sanctions that are taking place amidst that overall event. So crypto, once again, somewhat correlated to the equities market in the short term. We did see a pretty steep drop in market cap that did recover with the rest of the equities market. There was a pretty large sort of reversal pattern in the S&Ps placed on Thursday of this week, and we certainly saw crypto experience a similar event with a sort of a peak and then a return to elevated market caps. Not really showing much difference here, but just wanted to scroll down and show this difference without Bitcoin. And you can see that the total cryptocurrency market cap actually dipped, excluding Bitcoin, dipped below $1 trillion this past week. So the fear certainly took place across the board, and this asset class was not immune from that fear. Finally, some crypto news. With the events going on in Ukraine, the local residents of the country have wanted to withdraw some of their holdings just to have that cash and be readily available for whatever occurs moving forward. But as we have seen in history, when you have a larger run towards centralized banking, they do have the control over whether or not to enact certain rules to avoid liquidity issues, and then just avoiding the actual collapse of the actual institution. You know, if everyone does withdraw at the same time, usually that destabilizes an institution that doesn't necessarily have the cash on hand at that exact moment. So with this sort of uncertainty and the hopefully altruistic nature of other countries, we've seen a rise in crypto-related donations to the country. As of this recording, some of the news reportings are looking at about 20 million in different forms of donations. And one thing that's so sort of interesting about this event is we're seeing it across different types of assets in the crypto marketplace. Obviously, Bitcoin as a more transactional asset has been the initial one for people to utilize, but other projects like Ethereum, which we just took a look at, and then of course just stablecoin transactions and donations are also taking place. So while the uncertainty, the fear, and of course the human element of this news is a bit jarring, it's good to see a little bit of, I would say, positive reinforcement of both what crypto sort of was built for and also it actually taking sort of a stance during this time of uncertainty. So with that said, my name is Jared. This has been the weekly crypto update. Hopefully you've enjoyed this series so far. Looking forward to continuously adding to it, making us better traders, better investors, and just having a wide range of tools for us to use. So trade safe, stay risk defined this week as we see a lot of volatility entering the market, and hopefully we'll talk more next week with some new ideas. So till then, talk to you soon.